Welcome to Get Real with Eddie, where we delve deep into the world of real estate with your host, the designated managing broker of Exit Real Estate Specialist, Eddie Rudiger.
Good morning. How are you, Nancy?
I am well.
We have a guest.
Yes, we do.
Tammie Lester from Loan Depot. Hang on, I got to pull this card up. NMLS 938220. Get the legal done. Tammie, how are you?
I am doing very well, and I'm so excited to be here.
Yeah, you reached out and we were talking on the phone, and I said, well, why don't you come on the radio with us and have some fun?
Thank you so much for the invite.
Oh, absolutely. I'm going to turn your mic up. Wait, it should be that one there. Okay. Don't be afraid to get really close to the mic. Yes, like an inch away.
In here.
There you
More.
Oh, that's perfect.
That
That is what much better.
It's your new best friend.
It's my new bestie.
Yes. So, yeah, so before we get into it, you're with Loan Depot. Tell me a little about your journey and housing and being with Loan Depot and all that fun stuff.
You know, Loan Depot is great for me right now. My journey has been a long one. I'm 20 plus years in the business. I started out just like, I feel like I was an order taker at Washington Mutual, if anybody has ever
I remember them. I've been around.
Yeah, and I didn't know anything about mortgages when I was there, but as I moved through so many different positions, I was at Washington Mutual just as a loan consultant, they called us. Then I went to being an AE, going around to brokerages, getting them to give me deals. And then I moved into a credit union for a little while. And now I've been a retail loan officer for probably the last 15 years. And I feel like I've seen it all until something shows me I haven't.
But that is the amazing thing about this business. Usually, you hope it's only once a year.
Yeah.
You get something that you haven't seen before. And it's fun and it's exciting. When you're getting something you haven't seen before once a month, it's frustrating.
It is. And it seems to be like now we're seeing things like that go on.
Yes.
You know, and it's a weird but fun and interesting time in the market. And I'm enjoying it. I come from a household of like my grandmother,
Mm-hmm.
my mother's grandmother
Mm-hmm.
owned 9 properties in Pittsburgh when she was a kid. And so like we were like a real estate family, and I come from a veteran household, so I love helping vets. So yeah, I'm enjoying what I do, and it doesn't feel like work because I feel like I'm changing lives, helping people realize their dream of home ownership.
And we talk about it. It is the single largest wealth creator in this country. More millionaires are created from real estate than any other field.
Any other field.
And it is one of probably the biggest things that creates generational wealth also.
Multi-generational. Yes.
Wealth. That's
Yes.
a very good point. So yeah. All right, let's get into some news. This came actually right from Loan Depot on the 3rd of February. And that is the Fed did not cut their rates. They put a pause on rate cuts, and they are keeping the Fed funds rate between 4.25 to 4.5. And they will be discussing further rate cuts later this year. A lot of the talking heads are talking June-ish, and then maybe September, October, only seeing 2 rate cuts going on this year, which I know is disappointing Nancy, because Nancy wants the rate under 6.
Well, even at 6.5, I'd be thrilled.
So the rates aren't doing horrible, though.
No,
They're not.
they're okay.
I didn't see them this morning. Did you see them yesterday at all?
I looked yesterday, and in all honesty, like they're not terrible. Like some of the down payment assistance stuff is in the 6s, like the low 6s. And I think on average right now we're seeing, and again, we're dealing with credit and, you know, LTV and all loan to value for those who don't know, and all of those things. So I think you can get anywhere in the high, I mean, sometimes mid 6s to low 7s.
And that's not horrible.
It's not.
If we can get under that, I think Nancy's right. We get under that 6.5. we're going to see it. We'll see, because this weekend is Super Bowl Sunday, and that officially starts off the spring market.
Yes.
It's been like Super Bowl Sunday now has become the kickoff to the real estate market and itself. And let's see if rates start trending downwards, because I honestly think you're going to see competition with the banks. Nothing against you guys, but to get the business that's out there, you're going to see them competing a lot more this year than I think they ever have in the past.
Well, I mean, that might be true, but the thing about going with an actual bank, and I don't knock anybody. I've worked at banks, PNC. I worked there for 2.5 years, but what I realized working for a direct mortgage lender instead of in that space with a bank is that we do make sense lending, right? So whereas a bank is held strictly to a lot of overlays that they may have, we are loose. We don't have any overlays. So we'll go up to a 56.99 debt ratio on an FHA loan.
Absolutely.
You know what I mean? So, and that gives our buyers more buying power. And just to digress a little bit back to rates don't make or break it for us. I believe we have to look at it as if, and this saying is out there, and I know we've all said it and we've all heard it. Marry the home and refi the rate. When it's time, when rates drop, refinance and get yourself the rate that you love and leave it right there. That's what we've seen historically over time.
Mm-hmm. We always say here on the show, buy the house, rent the rate.
There you go.
I mean, and that's a big thing, is buy the house, rent the rate. And I completely agree with you. I've worked, and Nancy's worked, we worked with entities that had huge overlays in some cases.
Oh, yeah.
On their financing side and with their in-house lending company. And the aspect, from my aspect, has gone into now when we pre-approve or vet the lending. So when we have a listing and I vet the lending, one of the questions I ask is, do you sell direct to Fannie or Freddie? Because if they don't, that means they ran it through DU or LP. And for those that are wondering what those are, these are the two of the biggest software companies that kind of create the pre-approval letter for the financial institutions, the banks and the brokers and all of that.
It's an automated underwriting system.
It's an automated underwriting system. That's exactly what it is. Basically, you plug in all the data and it shoots you out a thumbs up or a thumbs down.
Correct.
Yeah. And if they don't sell direct to Fannie or Freddie, that thumbs up or thumbs down, in my view, is meaningless, because that means there could be an overlay, which is another requirement to get the loan, but you don't find that out until you are in approval from the underwriter.
That is correct.
So they're kind of, if they don't sell direct, I really question the pre-approval letters.
It's because there's another layer. There's another layer there, and you're never sure until you get there to see what comes out of it. So the one thing that I love about where I am now is I can work it and work it and work it until I find a solution, and I know that my underwriters are going to look at it just like I'm looking at it.
That's huge.
It is huge.
That is huge. Now, you had a very specific program you wanted to talk about, so why don't we talk about that while we're in the really meat of lending? Yeah,
sure. I have seen a lot of, and I was telling Nancy this earlier when we were just chit-chatting, it's a down payment assistance program that I believe has kind of changed the game, right? So with a 600 credit score, it is a repayable program, right?
Okay.
But with a 600 credit score, we will give our buyers they're 3.5%. It's an FHA program. So we give them the 3.5% for their down payment with a 600 credit score.
Okay.
And with a seller credit, they can come to closing with little to nothing.
Yes.
When they have a 620, we'll give them that 3.5% and another 1.5% toward their closing costs. So that in itself, in most cases, means they're bringing no money to closing.
Very, very little, if anything.
Yeah.
Very little. And with a small seller credit, I've had buyers leave closing with money.
And we were talking about that on the phone when you called me originally. And that was because I'm like, well, how does that work? And you're like, no, because in most cases, you cannot walk away from the closing table with more than what you put down for escrow, for earnest.
The only other time I've seen this, people being able to leave the table with money is veterans, VA loans.
Yeah.
They can do it.
Yeah. Because the underwriter allows it.
This is the only other program that allows it.
Yeah.
And this is not only for single family homes. This is for 1 to 4 units. I just used this program on a $900,000 4-unit. There's no cap on how much we will give, and there's no income restrictions.
If I was single and in my 20s again,
Yeah, right?
that's what I would have done. I
was younger.
For sure.
I would have bought a multi-unit and lived in one unit and rented out the other 3.
Of course.
I mean, I had my DJ business at the time, and I had literally $40,000, $50,000 worth of gear. So I wanted a garage to put it in. I should have kept it in the rental space that I was utilizing and turned around and just bought the multi-unit.
Yeah.
Is what I should have done.
I do that with so many people. A guy, one of my close friends, he was 19 when I met him. And he was always asking me about investment properties. He wanted to own. He wanted to build his real estate portfolio. He owned nothing. He lived with his parents. He was in college.
Yeah.
Now, and over the years, he's just stuck with me. So now this guy has his doctorate. He is a principal at a CPS high school.
Yep.
And he owns multiple multi-unit buildings. He started out just buying his first building, just like what you said you would do.
Yep.
And as a teacher.
Mm-hmm.
And lived in one unit, rented out the other ones, bought another one, and did it again and did it again. And now he lives in a condo with his fiance, but he has his real estate lined up for himself.
Good for him.
I mean, if
Good for him.
you do the math, if I would have 10 years ago bought $100,000 units and you had 10 of them, yes, you have $1 million in real estate. Yeah. But by today, you're talking $2 to $2.5 million.
Absolutely.
In property value.
Absolutely.
And you're talking they're probably 1/3 of the way paid off, if not more.
Yeah.
I mean, depending on how you have it structured and what your deal is, things like that. It just all depends. Because when you get to that many units, you stop doing conventional loans. You start getting into jumbo loans and consolidated loans and things that have a faster payoff, 15-year, 10-year payoffs in those circumstances. But you're also getting better interest rates.
Absolutely.
So, I mean, there's so many different avenues and so many different things to go on. That program for the financial assistance, down payment assistance, that's through Loan Depot, correct?
It is.
That is pretty amazing.
We are the only ones who offer it in the way that we do.
And it's Tammie Lester, and her number is 630-677-3556. If you guys want to reach out and talk to Tammie Lester, I'm sure if you just type in Tammie, I-E, Lester, and you'll find her. I'm probably on social media all over the place. So definitely look Tammie up if you are in the market for that. And the two reasons that can help, 2 resources that can help you buy right now is, the first is FHA loans. We've been talking about it already. It is a 3.5% down payment loan that you really can take advantage of. You don't need this 20% down. Do you keep running into this myth, Nancy, of 20% down?
Every so often it pops up that people think it's 10% or 15%. they don't get 3.5% down. So all you need. All
Yeah.
you need. So
And FHA is a great program. I feel like some people have a stigma about it, and I'm not even sure why, but it's a great program. I mean, I have buyers that can totally qualify for a conventional loan, but need to stretch their debt ratio a little bit more, and we use FHA to do that. It's a great program for that reason. And what a lot of people don't know, if you're going conventional and there's a situation where you have to, like in a condo or something like that, there is a 3% down conventional program.
That 3% down conventional program is another great option that
yeah.
is not taken care of. And the beautiful thing about that is it's conventional.
Yes.
Because we have, unfortunately, a lot of real estate agents out there in the market are advising clients, do not take an FHA loan, don't take an FHA loan.
Baffles me.
Yeah.
Baffles me.
It totally baffles me.
I agree. You should be taking an FHA loan as long as your agent vets the lending. If the lending is vetted correctly, all right? So, Nancy, let's go through vetting a loan really quick. When you call up a lender, what are the questions you're asking? Because we can ask them what the buyer's credit score is. They don't have to tell us that.
Sometimes they do.
They do.
You start asking your questions and you just shut up.
Yeah, they do.
Let them talk.
And it doesn't mean the lender's wrong. The lender may have direction. If they call, do tell them my credit score. I want them to know I'm a 700-800 credit score.
Yeah, for sure.
Why would you not?
It just helps build the case.
Yeah.
Exactly.
Yeah.
Yeah. Oh, my client has a 750.
Yeah.
They're
Solid.
fine. They're
Yes.
solid.
Yes.
As far as your questions go,
Yeah.
is that what you were looking
What questions do you ask for vetting?
I ask if they have any proof of their income,
Okay.
if they have proof of down payment, if they've gone through automated underwriting,
Okay.
if they have just general information.
Yeah.
Okay. What are they strong? Do you know them? What is the deal?
I always
The deal.
I always caveat at the beginning of the question. I'm going to ask you some really stupid questions, but please know I've been told no on all of these questions, at least at some point. And the first one is the most stupidest question. Did you actually run credit? Because I've
Wow.
had people say, "Oh no, we didn't run credit."
Really?
Yep.
How do you even get a pre-approval letter without running credit?
The last
Amazing.
so it's happened.
in a good way.
I could type one up myself for that.
It has happened multiple times. The last one was about 5 years ago. And the reason why is it was a rural area and I was dealing with the vice president of the bank and the family's farm was through the bank. So it's one of those kind of situations
Wow.
where they had all of the family's money and he's like, no, he's good for it.
So they were just going to lend regardless.
Yes.
Yeah.
And I'm like, okay, I still need answers to these questions, and my client will make the decision. And I took it back to my client, and they ended up withdrawing their offer from that, which was fine because it was a low bid offer anyways, and we got like $30,000 more.
Yeah.
But that was the situation, which I can understand in that case.
Yeah, that's not that terrible.
No.
When you first said it, I was like, that's ridiculous.
But in some other cases, it was terrible. it was just terrible. So it just depends on the situation. So I ask if they rank credit. I ask, do you have all documentation, proof of down payment, proof of income, stuff like that. All right. I ask if you have ran the taxes. What did you use for taxes?
Mm-hmm.
Yeah. Yeah.
All right. Just to verify if the numbers match up. Because if I'm a double the tax bill, because that's happened.
Yeah.
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 Especially right now.
They were looking at a $300,000 house out in more closer to the city. Wasn't in Chicago, but it was in the burbs. And they were all tiny little lots. So the tax on those lots were like $4,000. Well, they came out to Joliet and wrote an offer. It was 3 times the lot size, but the taxes was $65
Yeah.
because you're getting a bigger lot.
Yeah.
They withdrew their own.
Yeah, well, because they couldn't afford it.
Yeah, because it was outside.
It was out of the
Yeah.
price range.
Yeah. So, I mean, vetting the lending, and then, like I said earlier, do you sell direct to Fannie and Freddie is another question I have for them, because otherwise I have big questions on that. I ask if they ran it through LP or DU or both. I always like to hear both, because my view is 2 thumbs up is better than 1 thumb
You
up.
can switch it up if you need.
Yeah, exactly. I had a lender ask me, well, what does it matter? And I told her that. I said, I can turn around and know that they've got an automated underwriter approval from 2 different systems, not one. How is that not better than having it just from one system?
Yeah, I love the fact that whenever I run automated underwriting, it runs it through both simultaneously.
And there's some other ones that are out there, systems, but they're very, very, very specific to certain banks and certain things.
And certain products.
And certain products, exactly. So, I mean, I think IDA uses...
it goes by conventional or standard FHA and conventional guidelines, but if we're talking about like a USDA, they have their own automated underwriting system.
There you go. Yes. Great example. So these, if you're doing these questions and you're vetting the loan, you can shake the tree loose for about 80 to 90% of the problems. No, there's no guarantee that every loan is going to close. You're still going to run into some problems, but it shakes loose some of those bad loans and bad situations.
It does. It absolutely does.
I mean, you're not in control if they decide to go buy furniture 2 weeks before close.
That's one of the things that I tell everyone from pre-approval until they close.
Mm-hmm.
Don't make any credit purchases and do not act like you're poor. Don't spend any money. Leave your money in the bank where it is. Do not change anything from today forward until we close on your mortgage.
Yeah.
Only thing I want to see is your bank account go higher. Nothing more. And don't do any random
deposits. Not giant. Yeah, like random.
Don't do any random deposits.
$1,000 from your auntie who's decided to give you a down payment. Yeah. No.
We need a letter for that.
Yeah.
Absolutely.
Because that'll throw things off too.
You know, I always tell my buyers, look, or my realtor partners, like, look, involve me. When you send your offer, CC me on it. Say, hey, I've CC'd the lender. And you can reach out to them if you have any questions. And then if they don't reach out to me, typically I'll just call them and say, hey, this is where we are with this buyer. They're solid. This is what I've done. This is what I have. Looking forward to working with you in the future.
And I think that makes such a huge thing.
It does.
I've had lenders make that call, and because of that call, we close the deal.
Yeah, absolutely. Makes all the difference. I always ask my lenders if they'll
make that call. And that call can get the deal closed. So it can make a huge difference. So
it does. Absolutely.
The other resource we were talking about too is down payment assistance. So home ownership assistance programs, there are over 2,000 across North America. Down Payment Resource is a great website. I think we have that on our Exit site. I think it's on my site too.
Yeah.
So if you go to exitrealestatespecialist.com, it's there, or yourdwellings.com. I've got that link up on those pages. I'll double check that. But the CEO of Down Payment Resource confirms some of these programs can be layered. And so, in other words, you may not be limited to just one program. And that's kind of a cool thing if you can get multiple programs and layer them, because it really can give you a huge advantage. So,
yeah, that is awesome when that can happen.
Yeah.
All right, we're going to hit a quick break. When we get back after the break, Tammie is from Aurora, Illinois. So we are going to talk about the sales data for Aurora, Illinois. Keep it here with Get Real with Eddie.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
And get real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
Doing everything for you except the moving, and be glad. It's Get Real with Eddie.
All right, so how are things out in good old Aurora going?
I love Aurora. I've been there since I was 10 years old.
Really?
Yeah.
Okay.
Yeah, so I grew up there. I came to Aurora when EOLA ended, if everybody knows what EOLA is.
Yeah.
Little fun fact. Do you guys know what EOLA stands for?
No.
No, what?
Let me tell you. It's so cool.
Okay.
It stands for End of Line Aurora.
Really?
EOLA. Yeah.
Really?
I did not.
Isn't that cool?
I did not know that.
Well, it dead ended just past my house when I was a kid. So, like, there was no more EOLA.
No, so you know this for fact, or this is
No,
a
that
theory?
is a real fact.
End of line Aurora.
Yeah. Yeah.
I did not know that.
Yeah.
Well, that's like
Stands for.
Plainfield Road. When you get into when you're in Joliet, it's Plainfield, but when you're in Plainfield, it's Joliet Road.
Yeah.
Because that's how do you get to Joliet? Take that road. I mean, that's what it used to be in the back then.
That's exactly how it went.
How do you get to Plainfield? Take that road. So, I mean, that's how some of these roads got named, was like Plainfield Road. And that's like, when you look at the school district for Plainfield, cracks me up. The school district goes right down Theodore, pretty much, is where the school district ends.
Yeah.
Except one or two little niches of these little niche neighborhoods. And the reason why was the farmer was on the borderline. He had property on either side of Theodore, but the house was itself on the other side.
Where the school is. So they had to incorporate the whole land.
When they came to him and they said, well, what school district do you want to go to? Some cases they picked Plainfield, other cases they picked Joliet or Minooka, depending on where they're. So that's why you get these weird cutouts and these weird niches on the school border. 150 years ago, it was the farmer that decided everybody else is going to school that's going to come into that land. So there's some neighborhoods down Theodore where you get these little niche outs.
Oh, yeah, they're all over the place.
Uh-huh.
What's funny is on EOLA, speaking of EOLA again, there are a few homes that are in Aurora. They are totally in Aurora. There's one that has a Naperville address.
Uh-huh.
It's right on the corner of Montgomery and Eola.
Uh-huh.
And then as you go down Eola toward the new area where you're going toward 30, there's a little duplex and it's so cute. And it has a Plainfield address.
Mm-hmm. But it's City of Aurora.
But it is in the city of Aurora.
That is because our mass amount of government in the state of Illinois, addresses are decided by the post office, not by the municipality. Municipalities can annex into areas, and that's what decides what city you're in.
It's so weird.
And the last aspect is the school district is another form of government. So you could be in one city with one post office address with a different school district, depending on where you get it annexed. And for us, this is normal because if you go down Caton Farm Road, west of 59, all of that is Plainfield Schools, Plainfield School District. Some of it's Plainfield Park District and some of it's Plainfield Library. But it's all City of Joliet.
Joliet
Township.
Yeah.
So
Yep.
Lakewood Falls,
Yep.
Yep.
there's another one.
Neighborhood is Joliet Township, Plainfield address, and just
No, it's Lakewood Falls is Lockport Fire District, Plainfield mailing address,
Yeah.
and Romeoville City Streets.
and Joliet Water.
Lakewood Falls?
Yeah.
Up north?
Yeah.
It's Joliet
My
Water.
best
Wait, you're thinking of one on Weber Road, right?
I'm talking about the one on Weber.
Oh,
yeah,
I thought you were
Lakewood Falls.
talking about the one on
59.
Yeah, she's talking about Lake.
Yeah, I'm talking about
Caton
east.
Farm Road. It's-
But Caton Farm. Oh, well, that's because that was all back in the days where God was a child and I was a kid.
Yeah,
That's
when
all
you were a
Plainfield
child.
Township. When I was a kid, it was all farmland and it was Plainfield Township.
It's so strange. It's so strange.
It's I can't even.
It's
Yeah,
just-
it's crazy.
It's how our governments are layered. One government does one thing, and that's the whole aspect of it. So, all right, let's get into Aurora. Aurora is up for January. We got January numbers in, and they are up 5.3% to 300,000. This is on single family units, resale only, no new construction is in these numbers. That's the median sales price. The average sales price is 329,766, up 4.7% year over year. So that's not a bad growth for Aurora. You're looking at just
Not bad.
when they're talking 3% for this year, they're walking in, at 4 to 5%. That not where I'm picking I think we're going to be at year to year this year. Market time for Aurora on average is 23 days, zero change from last year. The median market time is up 14.3% to 8 days. So watch that clickbait once again, because we went from 7 days to 8 days, which could be one ugly, really, or a couple ugly properties. Aurora does a lot of sales, so it's probably more than one. Average percentage of last list price was 101.3%. So they're getting over list price in January.
I think that's more telling about the strength of what's going on.
I agree. The median is still 100.3%. It's down 0.9, but still a strong market. Percentage of original list price on the average is 100.8, down 0.7% from last year, while the median original list price is getting 100% of the price. Contract to close on average is 36 days. Listing to contract on average is 16 days. That is up 6.7%. So a little bit slowing of the market, but
1 day.
by 1 day.
1 day.
That's not terrible.
No.
No.
Again, it could have been one or two ugly houses.
Yeah.
Yeah.
The biggest number I look at, and this is little telling, is the month supply. Now, here's the trick. It is up 28.6% to 0.9 from 0.7. We have literally not even a month's supply of inventory on the pace that these houses are selling in Aurora.
Yeah. Which would make sense when you're getting 101% of list.
Yeah.
Yeah, absolutely.
Which it might be why some things are pausing, because it's like there are multiple offers and it's craziness and people are not ready or braced to take that on if you're not reading this data and you know what's going on in the market you're buying in.
Yeah.
You should be getting this data and you should know this stuff when you're looking at a town. Homes for sale at the end of the month of January, there was 119 units. That's up 16.7%. The new listings were up 6.6% to 1,952 units. Under contract was 1,532 units, up 0.6%. And closed sales is down 2.3% to 1,503 units. So that closed data really kind of, I think, is showing we're seeing a run-up in offers, but I think there's some hesitation with these multiple offers and stuff going on.
Yeah, I think it always makes it go a little slower because they have to look at all the offers, think about all the offers, compare, and
negotiate it out.
And that usually takes a little bit of time.
Yeah.
Showings to contract is down 11.1% to 24, which tells me there is an increase in showings, but showings per listing is down 15.9% to 14.3 showings per unit, which could be an indicator that these houses are going off the market faster and the public's just not reacting fast enough.
Mm-hmm.
You have to be out there.
100%.
Oh, yeah.
You have to be out there fast as soon as it hits the market.
Well, yeah, look, go back to the market time. 8 days.
Yeah.
Yeah.
8 days is the median and the average is 23. So if you're not checking your listings every single moment, you're going to be missing stuff.
Yeah.
Yeah.
I mean, your agent should have you on a drip campaign. You should have yourself on a drip campaign. You should be checking stuff morning and night.
Every morning when you wake up, look at
Yeah.
whatever engine it is that you use.
Yeah.
Yeah. 6A and 6P.
Yeah.
Get all over it.
Yeah.
Yep.
I mean, it all comes down to you're not going to miss something. Well, you might, because the way this all works is as the listing agent, I put it in the MLS. Usually once it goes into the MLS, the third-party sites will have that listing up on their site within 8 minutes to 4 to 8 hours, most for the majority of them. So having a listing coming directly from your source, and that's something you ask your real estate agent. Well, you're sending me these from the MLS. You're sending me these from your system. How often does your system update?
Yeah, that's super important.
We've got
Very important.
I just inked a deal for the office. We got a brand new system that's going to be coming out for our people, and it updates every 8 minutes. When those releases come from the MLS, it comes out because the MLS only sends it out every 8 minutes.
Mm-hmm.
I always tell my clients, when you're looking for a search engine for looking at homes, make sure that it's updating quickly. Yes. Like you're not missing a day or 8 hours where there's a listing that popped up and you don't know about it for 8 hours and now it's under contract. So
yeah, exactly.
Yeah, that's very important when you're looking on your own.
Well, and okay, it takes 8 hours for you to even see the listing. Now you've got to make the appointment. Now you've got to find time to go see it. Now it's done. It's over.
It's over. You missed
game on. Yeah, game's on. Bye-bye.
And that's our new system's got a cool feature on it. When they're on the site right then and there, they can click a date and request the showing from us.
Nice.
So awesome. That is going to be a really cool feature that we're coming out with. So that way it's going to expedite, that, hey, I want to go see it on Thursday. I want to go see it on Friday. And then you can just narrow down the availability time with the seller, because we got to turn around and see, okay, is the seller available for that time?
Right. Exactly.
All right.
Well, you want to make sure everybody's all available.
Yeah.
So.
All right. We're going to hit a quick break. When we get back from the break, we're going to talk about the real benefits of buying a home this year. Keep it here with Get Real with Eddie.
It's Eddie Rudiger from Exit Real Estate Specialists. And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
You made a smart move to get real with Eddie, helping you make your next smart move into your next home.
All right, Nancy, do you think we should buy a house this year, or do you think the market? No.
Absolutely. Buy. Why wait?
Why wait? I agree. It is a definite strong market. Bank of America highlights that 70% of prospective buyers fear the long-term consequences of renting. Well, I would too.
Yeah.
You're making a mortgage payment.
Why not make it be yours?
Yeah.
Exactly.
And you're signing a lease usually for a year.
Yeah.
That means you're stuck another year. That's another year you're not collecting equity.
$100,000 in rent.
Right?
And rent's not cheap nowadays.
No. It's hard to find places. There aren't very many, and it's expensive.
And in all honesty, sometimes it's harder to qualify for a rental than it is for a mortgage.
These rentals
Yeah.
on their qualifications are really
Ridiculous.
3 times income to, in some cases, I've seen 3.5
I've
times.
seen
Yeah.
4.
You've seen
I've seen
4.
four
You've seen
times
4?
the
Oh,
rent
no.
in income. Like for
Yeah.
a $2,500 rental, like
That's $10,000 a month.
most people don't make that.
Yeah.
Yeah. You're not making $10,000 a month.
No. It's insane.
Yeah. That's just ridiculous. They really don't want to rent that out, you know?
I don't understand it at all.
The National Association of Realtors, 79% of buyers believe owning a home is a good financial investment. And it is. When you look at the data going over the years, the average sales price of a house sold in the United States quarterly has risen dramatically since 1988. We had a small dip during the Great Recession from 2008 to about 2012. And then it started going back up again and then skyrocketed in 2001.
You know, I always tell people, if you look at the trajectory, the one thing about real estate is you'll see it go up and down, right?
Mm-hmm.
But it's always the trajectory of it all. When you pan out and look at it, it's always going upward.
It's always going upward. And that is very, very true. The increase in rents have steadily gone up also since 1988 and have really taken off since the Great Recession. That trajectory really kind of mounted and biked straight up.
Yeah.
And it has been going up. And it comes down to two things, supply and demand.
Yes, absolutely.
We don't have enough supply of rental houses. We don't have enough supply of single family houses. We just don't have enough supply.
Period.
And I understand. I watched a video yesterday morning about Florida.
Mm-hmm.
And Florida is seeing a price decrease, according to the video.
Isn't that funny?
I haven't seen, well, it's not, and there's a reason why. The migration for Florida has now hit a negative, according to the video. I don't know, I didn't fact check any of this, but according to the gentleman doing the video, the migration pattern to Florida is now more people are leaving Florida than coming in the last 2 years.
That makes sense.
Well, yeah, because how much are we hearing back to work, back to work, back to the office? You know, you're seeing stuff, I think it was 6% of all federal employees are actually working in an office. 94% are working at home.
Yeah.
You know, because the administration's on this big kick of getting people back into the office and back into work. And so if I could work from home and do what I do, I'd probably live in Florida too. No matter where you stand in Florida, you are 60 miles from an ocean.
Yes, you are.
At the most.
So wonderful.
I know.
At the beach.
So my wife has a theory. You are not on vacation if there is no palm tree.
That's true.
I want water. I want sand. I want
Yep.
an umbrella.
I want an umbrella in my glass is what I want.
Yeah. And a beach chair.
So
Sure.
it makes, I'm not saying the video is true, but it does make sense. And when you start looking at some of the areas, they are larger areas, larger towns that are usually a lot more sunnier than the state of Illinois. But you're going to see a lot of remote workers going back to work. And I think that the numbers kind of match up. I mean, he had about I think it was $100,000 or a $200,000, not dollar, but person migration. And that's about probably the number of people that were working remotely in Florida that now have to go back to work. So is it going to hurt their prices short term? Yes. Is their growth going to continue? Yeah. I don't see.
Of course, it can't stop.
I think it opens up an opportunity for value. But there's other factors we've talked about in the show. Insurance right now is
I was going to say
hard.
there's some other factors too,
Yeah.
like insurance, and with all the hurricanes down there, some people
scared.
decide to, they're scared. They decide to relocate.
Nobody wants to
So-
lose their whole livelihood.
No.
in a
No.
natural disaster.
No,
It's just,
exactly. And when you've got insurance companies pulling out of some of these areas and not insuring, and you can't get insurance, you're not going to, it's risk versus reward.
yeah.
Yeah.
So-
or they make it so expensive that you can't afford it.
Yeah.
You can't afford to live there anymore.
Yeah.
So
I'm licensed in Florida, so I see some here and there, and I noticed that I didn't notice that they were going down, but I noticed that they weren't expensive, and their taxes are reasonable. But yeah, I wouldn't want to have everything that I have there. Maybe a vacation home, I wouldn't want all my family heirlooms and Jersey.
yeah, exactly.
Yeah, I'm of the adage of, do we buy a house down there? Or do I just keep, using Disney property? Because we have a very bad habit and it's called Disney World. So, yeah, that's kind of where we run into. For right now, it makes more sense because we're only down there once a year.
Yeah.
Oh, please. You were down there, 3 times last year?
No, we were not.
Sounds like your math is off.
Yeah, just a little bit.
We
Just
went,
a little bit.
last year we went twice. I went in January and then we went again in October. But it's,
And then you went again in November.
no, we didn't.
You went twice in the fall because you took your mother-in-law and
In
then you
January.
guys-
That was in January
Okay.
last year.
then you went
In October.
like late summer, early fall, and then you went later.
No, I did not go.
Sworn you went 3
No,
times.
the late summer, early fall, we went up to Minnesota to Mall of America. because the wife is very big about doing a road trip too.
Yeah.
So she likes to,
Mix it up.
When did you go there?
she doesn't want. I want to say it was August. It's right after we opened the office. It was
Yeah, as
August.
soon as you took 2 trips. Yeah, right after we opened the office, you left. You
Yep.
went to Minnesota, and then you went down to
Conference.
conference,
For-
and that's
for
when
Exit.
you were in.
Yes, and it's not my fault. Exit decided to put it in Orlando, Florida, and my wife had to go with the kid and grandma.
It's not your fault at all.
No, I had no choice.
I'm waiting for New Orleans. Just
So,
putting it up there.
but there's a lot of factors going on, and it's not just Florida. There's other areas that are seeing some declines, but overall, nationally, we are going to be up in price. I mean, we've talked about the talking heads. Everybody's predicting nationally 3 to 4% increase. So roughly, I think locally we're going to be 5 to 7%. And the numbers hold out when you start looking at all of the data. It is going to be a challenging market. It's going to be a rough market because while inventory is going to increase, it's not going to increase as much as people think.
It's not going to increase to there's not going to be enough houses for all the buyers.
Yep.
No,
We're still not going to have what we need.
we're going to see a
Yeah.
10 to 15% increase in inventory, and the current streak seems to be showing that. And that's going to give a drip into a lake. I don't want to say an ocean, but it's a drip of water into a lake is what it is. So it's going to help and go from there. So, all right, before we wrap up, again, if you want to reach out to Tammie Lester at Loan Depot, NMLS 938220, give her a call at 630-677-3556. Tammie, thank you for coming today.
Thank you. I appreciate it. I've had a wonderful time. I do want to let everybody know that I can close a loan in about 2 weeks. My realtor partners are writing 2-week contracts, and we close them.
That's awesome.
Nice.
That's awesome.
Yeah.
Nice.
I appreciate this. I've had a lot of fun.
Awesome. Wonderful. Well, we had fun having you here. Don't forget, check us out online 7 days a week, 24 hours a day, 365 days a year. Get Real with Eddie, talking about your largest investment, your home.
Thanks for listening. Eddie Rudiger is the designated managing broker and owner of Exit Real Estate Specialists, located at 2750 Caton Farm Road, Joliet. License number 481014247. For questions, call Eddie at 815-823-5478.